Hi, this is Dan Collins, Editor-in-Chief of Modern Trader Magazine, coming to you live from CME Group on December 23rd. Well, the question everyone's asking today is, where's Santa Claus? It's 2 days before Christmas. We haven't seen the typical Santa Claus rally that we do in equities. Typically this happens near Christmas and up until New Year's, so there's still time. But it's interesting that it didn't happen. Some people are blaming the Fed. Tightening a little over a week ago, or exactly a week ago. That really seems unlikely. The December tightening was written into the books as soon as the October unemployment report came out in November. The market reacted to that. In fact, they reacted to the tightening in September when they thought it was first going to happen and sold off sharply. So that move was completely in the market. There was a little bit of a buy the rumor, sell the fact rally and some volatility around it, but that certainly can't be blamed. What we've seen this year in equities is a really tired bull market that hasn't been able to make a new high since May. A lot of people foresaw the correction happening in August, maybe not as sharp as it is, maybe sharper, maybe some people were thinking of a crash. It didn't happen. The market returned strong, but once again failed to make a new high. And that's the interesting thing about the remainder of 2015, because with the weakness of the last two weeks, if we do get a Santa Claus rally in the last week of the month, chances are it probably won't be strong enough to make new all-time highs around 2134 in the S&P. We're about 100 points away from that. So what that sets up, another rebound that fails to make a new high, that disappointment that's going to set up the next leg down, and that's going into January. That has, now you start talking about the January effect, and what happens in January indicates what's going to happen for the year. So it could put a negative tone on the markets going forward. What we do know is that the markets have to stand on their own. Pretty clear that zero interest rate policy and the open-ended quantitative easing had been holding up the market. Now the market has to do it on its own with real fundamentals, and it's been a very long bull market, and maybe it's time for a longer downturn. That's what people are worried about. But the markets do have to stand up on their own. Whatever Santa Claus rally we have, likely it's not going to make a new high. So at some point, you're going to see another downturn when the S&Ps fail to take out that high, unless they can manage a high in January. Happy holidays to everyone. This has been Dan Collins for Traders Exclusive. See you next time.